Well, in the last 15 minutes, roughly 3 million award and minimum wage workers have learned that they will receive a pay rise of 3.5% from July 1 of this year. This follows that ruling by the Fair Work Commission, which we brought you live. Joining me now is our business reporter, Ed Boyd. This figure widely expected. It's almost bang on expectations, isn't it, Ed? And it's about an extra, 84 cents an hour.
Yeah, an extra 84 cents an hour. Look, 3.5% pay rise coming in from the 1st of July, as expected. What happens with these decisions is their employment groups usually say we want to give our workers a lower pay rise. Unions say our workers demand a much higher pay rise, and then it ends up somewhere in the middle. And that's what's happened today with the ruling from the Fair Work Commission. Come in at 3.5%. In previous years, with high inflation, we've actually seen the pay rise not actually be higher than the level of inflation in our economy. So we've seen people in a sort of negative position with their salaries. This time around, though, inflation was at 2.4%, the most recent reading at an annual rate. And with the wage increase of 3.5%, it means in real terms, people are getting an actual pay rise this time around. We've also seen in previous years surprisingly large increases from the Fair Work Commission, which we've heard from previous Governor of the Reserve Bank, Philip Lowe, was surprised by a high level of wage increase a couple of years ago. But that hasn't happened this time. The expectation was 3.5% at an annual rate. That's what we've seen today from the Fair Work Commission. It'll come in from the 1st of July, so people from that point onwards will start noticing a little bit extra money in their pay slip each month or each couple of weeks, whenever they get paid. But this decision was expected, Laura. We've got the stock market reaction, because this is also quite important for rates in the economy. You can see the stock market is actually up pretty strongly. It's up 0.6%. I think 8,480 points would be a 3.5-month high. So we're getting very close to a 3.5-month high for the ASX 200 this morning, which is trading pretty strongly.
Yeah, it's still a little way away from that all-time high as well, which is about 8,500, isn't it? Ed, before I let you ask you about this next story, I wanted to just ask you about how you read that market reaction. So is that investors telling us that they think the Fair Work Commission has got that about right? It's something the business can absorb.
Yeah, exactly. Look, in the past, when the Fair Work Commission have lifted wages more than 3.5%, there's been concerns that it's going to trigger a wage price spiral where people get that extra money, they spend it in the economy, and it pushes inflation up even higher. And then to bring inflation down, the Reserve Bank would need to raise interest rates a lot further to sort of crunch consumer spending. But this time around, looking at the figures from the ASX 200 there, the market thinks this was a good decision from the Fair Work Commission. It wasn't too high, it wasn't too low either, and it should be just the right level to let the Reserve Bank continue on its path of cutting interest rates. Looking at the money markets just this morning, there was a 71% chance of interest rates being cut at the next meeting, which it will be on the 8th of July, so in about 5 weeks' time from now. So that hasn't changed. So the Reserve Bank is still expected to cut rates, and the market is obviously positive about it in early trade today.
Yeah, absolutely. Ed, what about this student education provider, IDP? Its profits could be cut in half this year. This is due to the changing immigration policies, not only in Australia, but the UK and the US too.
UK, US and also Canada, and then obviously here in Australia. So IDP Education, it's a big ASX listed Aussie business, but it's been under quite a bit of pressure over the past 12 months as various different governments have come out with much tighter policies around immigration, around cutting the number of international students. And we've seen most recently in the last couple of weeks over in the US, President Trump basically putting a pause on international students at certain universities. Here's a look at their share price over the past year. You can just see the share price is down almost 53%. And today they put out an announcement. It's too early to see the actual market reacts to the announcement, but their profit could be up to 50% lower than last year due to these big immigration changes. So it obviously is going to hurt this business significantly. So we'll probably see the reaction in the next hour or so, but a pretty significant announcement out of IDP Education, which basically placed international students into universities around the world.